Hello and welcome to Do More with Your Money. I'm your host, TJ Van Gerven. Today I'm joined by Vrishin Subramaniam, a fee-only financial planner, fellow friend of mine, and specializes in working with Globetrotting Indian Millennials and Gen Z. So I'm really happy to have him on the podcast today to learn more how he's helping his clients do more with their money and just pick your brain essentially. So thank you for coming on the show.
Yeah, thank you, TJ, and 5 points for pronouncing my name correctly.
I know. That was a big concern of mine, so I'm happy I got it right. We did some test runs there, so always want to make sure I get that correct. So thank you so much for coming on today. So basically, I just want to start off and learn a little bit more about how you got into financial planning and just
Yeah.
give us a quick background on what made you want to start your own financial planning firm.
Yeah. So lived life experiences. I'm a career changer, which basically means that I am not from a traditional finance background. I'm an engineer by qualification, so I came to the US for to study undergrad, and then the story goes that I moved to the Bay Area, where I started my career on a salary of $75,000, which, if you know anything about the Bay Area, is not enough money. Had to get smart about managing money, and then learned about saving, budgeting, investing, the whole nine yards. Saw other people who were my peers who were earning 150 to $200,000 making all the same mistakes. So I tell people this jokingly, but like I gave them free advice, they didn't take it, so I decided to go get a certification and charge them for it. But basically, I had a moment of clarity when one of my high school mates, very smart, went to MIT for undergrad and then Stanford for PhD, interned at a Silicon Valley startup, and just had a crap load of money sitting in a checking account. And they were like, "What do I do with this?" So I kind of broke down 5 or 6 simple steps for them to do. And then 6 months later, when I met them, they had not taken any action because it was all just very overwhelming, and there's so much emotion associated with money that they couldn't kind of get themselves to do whatever. And then that kind of crystallized the idea that money is more than just the checklist of doing your 401k and things like that. And I got interested in the psychology of money and learned about the profession. And here I am 5 years later. So,
That's an awesome story, man. And it was a pleasure to meet you. I think a few years back at XY Planning Network, and so it's great to see, how you've built your career and crushing it on social media and providing a ton of value to your audience. And so, I basically want to build on that and hear more about, you know, I know we talked a little bit about the specific problems that your clients are facing,
yeah.
your demographic is facing. And I'd love to hear more and just learn more about, maybe some of the issues as it goes with like visas and just managing money across international borders because that brings a whole new, set of issues, right?
Yes,
So, and
yeah,
I'd love to hear more
absolutely.
about that.
Absolutely. I think I'll focus more on the first part of it because a lot of it is, typically the life cycle of somebody who comes to the US, at least from India, is they come either for undergrad or masters from where they're trying to get a job directly and then start working. And the way the immigration process works is that your company has to sponsor a visa for you. It's called the H-1B visa, and you're basically at your employer's mercy for
Mm-hmm.
the rest of life. Where the H-1B, basically it's at will employment, and if they fire you at any point, you have 60 days to pack up your stuff and leave the country if you are not able to find another job.
Wow.
So in some sense, that puts tremendous pressure in case you like lose your job at any point. But beyond that, too, like the pathway to legal immigration into the US as a to become a permanent resident or a citizen is to have your company file what is called a green card petition. What happens there is that the US has a limited number of slots per year by country. So that means we have just like 100. I don't know the number off the top of my head, but they just have like 140 or 150,000 slots, and you have about 300,000 people that apply, and so there is an overflow each year that's happening right from the 90s or the tech boom of the 2000s,
Mm-hmm.
such that now the backlog for your visa through employment-based employment-based sponsorship is at least about 99 years. So realistically, the
Wow.
people that come now are never going to get there visas. And so there, that kind of informs everything. Like, are you ever going to be able to retire here? Does it make sense to put money into a 401k? Do you do a Roth IRA? Do you get any of the tax
Right.
benefits of any of these things if you have to end up moving back, right? So
Right.
that is kind of where that decision tree happens, where money is less of a priority than immigration status, because that
Right.
is like the thing that kind of determines all the decisions. and
Right.
uh, and based on that, now people just end up taking no action at all, or they take action based on what they've seen their peers do, even though they might have had a shorter wait to get a green card, right? So my relatives who came here in the 90s, they had maybe like a 5 year wait to get a green card, and they have different advice versus like somebody who came in the
Hmm.
late 2000s and has to wait 30 years.
Yeah, no, absolutely. That I can see how that would open up a whole different discussion from a financial planning standpoint. So I guess what is the typical like somebody that's on that visa, you know, is their aspiration to be here like for the long term if they can be?
Yeah, I think most people that I talk to that come to the US have the intention of staying here, settling down. Um, but realistically, options are fairly limited, right? If you're not going to go through uh, employment-based sponsorship, your
Hmm.
other options are fairly limited, or you need to show or create a case for like an extremely high degree of skill. So,
Right.
um,
So it's like true ultimate meritocracy then with like
yeah,
basically having to
in
be
in
compete for that position.
in some sense, yes, yeah.
Wow, that's a lot of pressure for sure. And okay, so talk to me a little bit about some of, let's say that you are, working here, and as far as taxation goes, because I am interested to learn more about, when it comes to things like, paying into Social Security and Medicare, right?
Yeah.
How are you still paying into those types of
Mhm.
taxes and not necessarily building up those long-term benefits?
Yeah. When you start off as a student, you basically don't pay Social Security and FICA. But what happens is once you get your H-1B visa, which again is a lottery, and I'm not going to go into that whole thing because it's a mess. Basically, once you
Okay.
switch over into employment-based H-1B employment-based visa, you then start paying into Social Security and the FICA. But what happens there is that you need to demonstrate, like you need to stay here and work for 10 quarters in order to be eligible.
Qualify.
And
Hmm.
somehow they say that you don't like you won't get paid if you're outside the country. So I don't know how realistically that would work because I've not had
Get
any
to
of
that
my
point.
clients claim Social Security, but like they say that you are eligible even if you're not a citizen. At the
If
same
you
time, they
get the
say,
quarters.
yeah. At the same time, they say, like if you're outside the country for like 13 months or something like that, they will not they stop paying you. And the challenge there
Hmm.
is also, if you move back as an immigrant, how do you maintain your like you don't have an address to maintain a bank account or anything else to get paid into? So how do you like
Right.
set up that whole infrastructure? It's a big question mark that I'm
Yeah, we don't.
working to understand.
Got you. Yeah, that's interesting because that would definitely be a bummer to have pay into that system, right? And not if you did qualify for the quarters, right, and then not get
Mhm.
that benefit on the other end.
Yeah.
So you did mention, right, like the transferring of money and resources, right? So I'd be interested to learn more. How do you go about like transferring resources from different currencies and things of that nature if you're going to go from country to country?
Yeah, I I tell my clients try to do it as less as possible because obviously there is a currency there's currency erosion and there's currency depreciation and then there's currency spread when you deal with like transferring from banks here to banks there.
Right.
Basically, a lot of the Indians that I talk to are very bullish about the future of India, where they're like, India is returning, 12 to 15% if I just put it in the main index in India. And so as a result,
For the
most
stock
people have
market.
like been sending money back either to their parents or to have somebody invest on their behalf in the Indian market without kind of
Okay.
accounting for the fact that like the currency erosion is about 3 to 5% each year, which means accounting for currency, like adjusting for currency erosion, you're back at the 9-10% that you would have got if you had just put it in the index fund here, right? Um,
Gotcha.
so that those are there's a lot of, like, I guess, misinformation or like a lack of understanding on people's parts. But yeah, I mean, like, when you become a non-resident Indian, as it's called, you basically have to create an account in India. You convert your bank account into something that's able to receive foreign currency from here, which you're able to remit, and then they provide you conversion at whatever rate they set. And then there's other organizations that I kind of work with. I think they're called FPO, where you're allowed to buy like futures on currency and things like that in case you want to create a hedge, knowing you're going to
Hmm.
move money in a couple of months and things like that. So those are definitely options that we consider for clients if they're
Yeah,
looking to move big sums of money across countries.
that's really interesting. Okay, so let's say you are, so a couple of questions, follow-up questions on that. Let's say a client, do you see that people tend to have that home country bias where they want to invest maybe a disproportionate amount of their assets in maybe the stock market in India?
So in if we're taking specifically the case of India, I would say yes. Partly because we have family back
Growth.
home. Like, there is a thing of, like, you know adults or people who are further ahead of us in life, who have kind of navigated wealth building and can advise you. But the large bias is, or sorry, we I think people largely tend to prefer buying real estate because that is seen as like an asset class that has done extremely well, especially for
Hmm.
the parents' generation. So most people that I speak to, the goal is to, like, own property. And if you live in, like, a high cost of living area, like a Bay Area or a Washington, and you cannot necessarily not afford apartments over there, they end up buying apartments in the home country or the home state, which then is what you're trying to pay off, and that becomes your kind of primary investment as opposed to, like, doing equities, because there
Gotcha.
seems to be a lot of, again, mistrust in the equity system, because everybody has a relative who has lost money because, like, stock
Mm.
market is risky because most people are, like, trading over there. So
They're not buy and hold type
yeah.
investor. Okay. Yeah, that's interesting. So it's funny to hear that because I think that goes across cultures, right? Like the older generation is going to view real estate as the safer
Yep.
asset because of what they
Yep.
experience, right? Interest rate environment,
Hmm.
purchase price, cost of living, right?
Yeah.
Um, and actually, a question on that point, because this has come up with me before, and I've had to navigate it, and you're much well versed in this, is talk to me about how that works as far as the borrowing structure in India
Yeah.
and how their interest rate environment works. Like, because with fixed rate versus variable rate, those kind of
Yeah. Yeah, they don't have, from my understanding, we don't have, like, the 30-year fixed mortgage equivalent. So it's all set as, like, a floating rate interest. So I'll give you an example of
things.
one of my friends who bought a property when interest rates were zero, and they were basically funneling extra money to, like, pay off the loan quickly. And then the
Mm.
interest rates went up, and they basically added back almost the entire extra amount that they had paid back onto the mortgage because the interest rate had, like, gone up. So the at least in a rising interest rate, I know it's like a floating interest rate, so borrowing costs have gone up.
Sure.
It'll I'm waiting to see what will happen once interest rates get cut, whether banks will bring it back down, or whether they'll just kind of keep it, because, like, they don't have any incentive to reduce rates if they're getting paid 15-18%.
Yeah. So it's not a private system. It's a public system as far as like it's an adjustable rate mortgage. Everybody has the same rate.
Oh, well, it's all originated by private lenders, so
Okay.
there is no. I think it's very similar to how the U.S. works, right? Where the the federal government sets like a base rate, and then you
Yep.
do a base rate plus whatever spread that you are getting.
Gotcha. Yeah, it's like a Fed funds rate if they drop that rate. Okay, interesting. Yeah, so I guess how do you approach, financial planning with clients that they do have this variable rate, right? If rates are going up, they're not locked in, now their interest costs just increased.
Mhm.
I mean, I can see how that could probably present some problems. Like
Yeah.
if you're thinking about just buying in general and holding for a long time frame, right?
Yeah.
How do you approach that?
Yeah, the first kind of large conversation I have is whether real estate is something you want to buy, or whether whether you want to buy it because you want to buy it, or whether you want to buy it because you've been told you should want to buy it, right? Which is the
Right.
big distinction that I make for Indian clients who are like, we want passive income and like real estate is the way to do it, or like we want to own property because that's what has worked for our parents. And like even think about living in the US, right? You're basically assuming a liability for a fixed asset for 30 years when you don't even know if you're going to be in the country for more than five. Like you don't have visibility. So
Right.
a lot of it is kind of having those conversations first to see if real estate is really what will help them achieve their goals, and then after that we get into the nitty gritty of like, okay, like what is a an interest rate you're willing to pay? Does it make sense to borrow against like assets? Does it make sense to build assets in India and then borrow against it, or just kind of borrow and then just say, you know, given the interest rate goes up, you still have the benefits of currency depreciation, so you should not worry about paying it off as quickly, or just kind of let it do its thing because ultimately you want to go back to India and retire and things like that. Because rental yields are horrible in India. Like you will, if you live in a big city, you'll probably get 2%, sub sub 2%, and
2% of the value of the property,
yeah,
you're saying?
yeah,
Okay.
which
So
is
the rent is in core, so the cost of ownership is much higher
much
than what
higher,
you can get in
much
rent.
higher. Yeah. So,
Yeah.
and I think in the US the rate is a lot more sensible. I think it's like 3 or 4%. But
Hmm.
you know, the sub 2% and like not accounting for operation costs and and
Yeah.
maintenance and things like that, you basically are left with nothing if you also account for currency erosion. So
So
it
yeah,
is
so it's really you're just banking on the appreciation of
appreciation.
the real
Right,
estate,
right. Yeah,
essentially.
yeah. And that, yeah, so that is a whole bubble and we don't know when that is going to burst. That's my opinion, right? So we
Sure. Yeah.
ultimately don't want to color clients plans with our biases, but it's important to kind
Right.
of make sure that we at least check theirs. So,
No, for sure. And listen, any real estate purchase, right? Like I think you alluded to, is it's really time horizon.
mhm.
If you have the long enough time horizon, the math can work out.
Yeah.
Even if you're having these fluctuating interest rates or a high fixed interest rate, because there might be opportunities to refinance or just in general, right? It's all time horizon is the main thing. But like you said, people often, overestimate their confidence that they're going to really want to own that property for that
Hmm.
length of time,
Yeah.
and their things aren't going to change.
Yeah.
And so one more question on that same note, kind of back to taxation is, let's say you do own, property in
Hmm.
India and you're receiving rental income, and let's say it is positive cash flow, right? How does the taxation system work between, obviously you're paying taxes in the U.S. on the income you're earning here, but then like outside income sources, let's say you have an investment account in India, you have some rental income. How does that work on taxation on both sides?
Yeah, hire a CPA equivalent in India, and you get them to file your taxes. And
Okay.
the idea is that you will have, in that particular scenario, you will have like income from equities, income from the house, that like rental income, and then but like you're also having depreciation and all other things that you can recapture based on what you have in India. And then the net total that you've paid, you can basically claim as like a foreign. Um, I'm trying to remember the term for it, but it's like a
Tax
foreign
credit
tax credit.
or,
Yeah,
yeah.
foreign tax credit equivalent, that you can use to like offset against your current returns. The problem is that India has like an April to April tax year, and US
Mm,
has a Jan to Jan tax year, and so sometimes it gets very frustrating because like that return you have to file an extension in the US, wait till you receive that return, and then submit that as part of your tax filing when you file in October each year.
yeah, I can see that logistic. So you're not paying double taxation because you're saying that you get
No,
that there's a tax credit that comes back.
no,
And then the income you're earning in the U.S., you're not being taxed on
no,
in India, right? Okay.
no. Yeah,
Okay.
you have a specific. India has very interesting like foreign income. rules and things like that. Basically, if you live outside the country for more than 183 days, you're considered a non-resident, and like you get special tax provisions. And then
Hmm.
they also have rules for like the first 2 years if you move back, where like you've been living outside the country for 5 years, you come back, and then suddenly you're a resident, but you're not ordinarily a resident. You have a different tax qualification, and then after that, once you kind of wean off the non-resident part of it, you have a like completely normal resident taxation that is like different. So the
So yeah, and hire a CPA is what I'm
pretty much, yeah.
hearing.
It provides a lot of opportunities for clients that have been in the US, and then all of a sudden they find themselves back in India, and that window where you're like a resident, not or ordinarily a resident, has a lot of like, it still has a lot of perks. So like if you're trying to like, if you've like had to move back and you just kind of are looking to like take money out of your 401k or something, where like you would have otherwise paid high amount of taxes on it, on like being a resident in India, you kind of are exempt from that. So there is a lot of
Okay.
planning opportunity in that bucket if you so choose to.
Okay, interesting. That's interesting. And then, yeah, I guess in that same vein, right? If you have access to your 401k, right, and the
Mm-hmm.
client has access, how are you approaching, right? Like how much money to tie up with essentially, like you alluded to, the U.S.
Mm-hmm.
system, retirement system, right? And going Roth contributions, traditional
Yeah.
contributions. How do you approach that?
Yeah. I tell people that, regardless of where you live, you still have to retire. That is
Hmm.
something that people forget. Like the whole conversation becomes about the taxation and things like that, but you forget that the money has a use, and that use is to like see you through retirement, which like you still have to retire if you go back to India. And so that being said, trying to optimize for taxes when you have a 30-year time horizon may not make sense, because between now and 2060, like they would have changed the tax code. They might have recognized the amount of people that are in the US that are trying to repatriate money or like have
Hmm.
401ks. And they might, like Congress in India might change rules where uh, they recognize like a special taxation status for 401ks. So it's already happened actually, where they recognize 401k in a certain like type of preferred income bracket, and so you get
Okay.
capital gains recognition on it, as opposed to just paying ordinary income. It has not happened with Roth IRAs right now, right? Where Roth money is technically supposed to be after tax or tax free. India does not recognize that right now, but like even trying to contribute to something like that with, when you're trying to take it out in 20-30 years might not make sense, because or evaluating it based on the taxation might not make sense, because Congress will change their rules in 20 years. So
Right.
I say try not to optimize for that, and just look at what that dollar is going to be used for, and then you just have to pay taxes somewhere. It's
Right.
there's
Yeah.
only so much you can optimize for it
Right, and if you're getting a benefit, tax benefit, on the U.S.
right
side
now.
in
Yeah,
the current year, that there's still value to that, right?
right.
Money is money.
Hmm.
No matter where it is, it's just that the taxation is
Yeah.
going to change.
It's like an example of like, if you live in the US, like people are like, oh, I don't want to put money in a Roth IRA, and like I'm going to put it in a taxable brokerage account, which like on
Yeah.
the back end, if you take that money back to India, the taxation for both of those are exactly the same right now. But if you change
Right.
your mind and you decide to stay in the US, one comes out ahead, right? So if that's the case, when you're evaluating like both sides of whether you're going to end up staying in India or whether you're going to end up staying in the US, one combination of having all the money in the Roth just comes out ahead, because you have
Hmm.
optionality, as opposed to a brokerage account where you only you will have to pay taxes regardless of where you go.
Right. And you could still take your Roth contributions out, not be taxed on that,
Yeah,
and then move that money, right?
right,
So it's not like it's totally locked up,
right.
anyways.
Yeah.
And that's for anybody. That yeah, regardless if you're taking it overseas. Awesome. So talk to me a little bit on the insurance side of things. As far as, are there any kind of unique risks as far as when you're working with this cross-border type planning that maybe is outside the ordinary?
Yeah, I'm still working through this. There are a lot of like very interesting edge cases. One of the recent ones I came across was like getting disability for clients. Excuse me. One of the big things that I came across was disability, where like when we shopped around for long-term disability for clients, each provider seems to have a different clause on how things work, right? So if I were
Mm,
like the basic question was, I have somebody who's a foreign national who like resides in the US legally and is employed, like are we able to get disability for them and how it would pay out? And in the situation in this situation, like if somebody who is on an H-1B visa loses their job due to a disability, they have to leave and go back to India in 60 days, right? So
right.
how does disability pay out in that situation, given you have like a disqualification period and things like that? One of the providers was like, as long as the incident happens in the US, like we will continue to pay out. One of the
Mm,
providers was like, uh, we will pay out for 12 months if they move out of the country, and then after that we will stop paying out. And then a
mm,
third provider was like, no matter, like we will pay out no matter what, no questions asked. So it really, like, I have found that working with a broker as opposed to like going through an online platform makes more sense in this case, because you really need to like have somebody who is able to talk to the insurance providers, the underwriters, and figure out like what the clauses are and what would make sense, and
yeah.
sign up for insurance. But term life seems to be like a no brainer. It's still something that we want to hold regardless of whether we stay here and go back. Disability is the only other big thing that I think people are wary of getting, because it's like it's an expensive thing that you necessarily might
Yeah.
not want to do. But I think that is the second big thing that I would kind of think of for my clients. And then the third big thing I think is just like talking about education funding, which they're trying to like which is one of the buckets that I've seen most goals, which is one of the big goals that I've seen most clients try to fulfill. And so
Mm,
that, like, trying to find some insurance coverage to make sure the kids are taken care of, in case something happens, or in case you decide to go back and you have a drastic pay cut, and whether you're still able to afford to send your kids back to the US for college is something that
yeah.
I'm still thinking through how to solve
No,
with my
yeah,
clients.
that makes a ton of sense. I mean, I think long-term disability is like the most overlooked risk, I
Mm-hmm.
think, especially for accumulators, regardless, right? Because people, like you said, it is expensive, but it's
Mm-hmm.
expensive for a reason because you're
Mm-hmm.
insuring your income, which is your biggest
Yeah.
asset, especially earlier in your career. And it makes even more sense in the situations you're describing because if you have to go after 60 days of losing your employment, I mean, that's even more of a reason to have a policy, right, that covers you based on your current level of income, regardless of where you live.
Mm-hmm.
Because if you can't come back right now, you don't
Yep.
have the same access to that level of income
Yep.
potentially, right?
Yep.
So I can imagine that would be a huge thing, and why it would be so important to work, like you said, with an independent broker,
Mm-hmm.
and understand your policy.
Yeah. The
Um,
other part is obviously like
sure.
making sure clients see the value of, or people see the value of that, right? Where like it's not
Mm-hmm.
necessarily something that clicks for people, and having to talk them through that is
Mm-hmm.
important, as you've highlighted.
For sure. Listen, I'm somebody who's not the most like insurance inclined. I don't love obviously paying out huge insurance premiums for things because it is kind of like one of those expenses where you hope you don't have to use it, right? In most cases, but when it comes to these catastrophic risks, right? Like obviously you're aware of, um, it makes sense to pay money, and that's how life works, right? Money is a
Mm-hmm.
tool, and that's why when we talk about do more with your money, right? It's not always like, hey, let's invest, let's keep growing wealth. Like, let's do more with protecting ourselves, with enjoying ourselves, right? So
Mm-hmm.
it's not just the accumulating side of things, even though that's where
Yeah.
we tend to gravitate, right?
Yeah.
So awesome. Talk to me about like emergency fund planning. Like, is there any difference there as far as how you approach that for having a substantial emergency fund?
I go back and forth on this one. I tell people realistically you only need 60 days of like runway, because you're gonna get kicked out of the country. It's a very dark
Mm.
approach to emergency fund planning, But really, I think like 3 months is good enough for most people. But again, it is what you're comfortable with. Sometimes people like just seeing a nice round number in the bank, and there is some, it's like there's something to be said of the psychological safety that you feel seeing a number that you would otherwise wanted to see in your bank account. But standard 3 to 6 months is what I recommend to people. If they're comfortable keeping less than 3 months, then uh, it's something that we talk about, or at least have that portion in something that's slightly less risky,
Yeah.
given that
No, that makes sense. I would say so. To piggyback on that question, right? When we think about like risk tolerance, right? Clients' ability, appetite for risk versus their capacity for risk, and we can think about that from the planning side of things, right? With having emergency fund, or the investment side of things with being more aggressive. With your, the folks that you're working with, do they tend to be more aggressive, more conservative, all over the place? What does that look like?
I I haven't figured that one out. There are people that are like, oh, I'm very conservative, and then they've not invested anything except all the money that they've received in RSUs are like 100% invested in the company stock, which is
Right.
like, okay, you're saying one thing, and like, yes, you've taken action on this side, but you've completely ignored it on this other side of your money equation. And so kind of helping people first reconcile those two things to be like, okay, well, I am risk averse, so I do have to do this in my entire universe of money rather than like thinking about it just in terms of this one account where I'm not investing riskily is something that I've seen a lot of people, and like it's come up time and again. And a big thing is also just this like mistrust of equities, right? Because
Mm,
you hate volatility, but in my brain, if we treated buying a property, investing in equities the same way as buying a property, where you were forced to put money in, you locked in for a certain amount of time, and you didn't look at the value from day to day, I'm sure like people would come out ahead. That's not how we treat equity investing. So a lot of working with
right.
first generation immigrants is firstly explaining how the equity market works, and then like coaching them through the psychological aspects of volatility, and helping them reconcile what they perceive as risk versus what are the true risks in their situation.
No, that makes 100% sense, and I love that you point that out because I see that a lot as well. As people will say one thing about, oh, I am aggressive, or oh, I'm more conservative, but then their actions within how they're actually currently managing their finances does not reflect that. And right, like you said, that bridging that gap is the education of like, hey, here's what actually conservative looks like, or here's what aggressive actually looks like,
Mhm.
and then also, right, yeah, like you said, reframing what is risky and not risky, right? We view real estate as not risky because we don't see it move on exchange like we see the stock market move on exchange. But if your
Mhm.
house was traded on exchange, you would see that volatility. And so that's tremendous value there.
Yeah.
Um, yeah, and I guess I was trying to also ask is like, is there any kind of cultural influence there as far as like, aggressive conservative nature? I don't know if is that something that you see, or is it just dependent on person to person?
I think that there are definitely cultural aspects to it. I would say, especially when we're thinking about investing in your entire life, you don't
Mm-hmm.
have like they're not thinking about um, there's an expected, there's a much higher than, sorry, I need to rephrase this. Do you
No,
mind
you're
asking
good.
that question again?
Yeah, I was just wondering, like, basically, cultural influences around investing. I know, some cultures, and maybe it could be like religious, as far as like not making money with money, right, is something that is frowned upon, right, in certain things, or being more conservative, and you kind of touched already on it already with like real estate focus, right, as far as like that being like the safe investment, right, versus
Yeah,
stock market.
yeah, um, yeah. So there are a lot of pieces of like saving money that are culturally embedded in
Mm,
like coming from India, right? So one of the big things is like for each function we buy gold, which is meant to be like a saving investment vehicle because like gold at the old time was like currency. Over time, that has kind of not been the case anymore. So I tell people now you can just buy gold ETFs instead of buying physical gold. Uh,
yeah.
but yeah, I think a lot of it is kind of coaching people towards thinking about equities as something that is more than something that you just kind of trade day in and day out, and really kind of think about what are realistic expectations, because
Mm,
if you've seen the Indian equity market returning 15%, like you're expecting the same of the US market, which is a much more mature market. That may not be the case.
mm,
And things like yeah, obviously real estate, as I talked about previously, where that is seen as something that is the best pathway to grow wealth, but it's out of reach for a lot of people that come to the US because you're earning a very average salary, and you most likely, if you work in tech, live in a very high cost of living area. You're basically
yeah.
killing yourself to make the monthly payment. And there's just this like anti-renting there's this anti-renting behavior that happens everywhere. So
Oh
a
yeah,
lot of it
even
is
though
just
even though the math says otherwise, right? That goes across yeah, cultures. um, okay, so on the same note, I want to ask you about, are you having any interest from clients in the cryptocurrency space? Your general thoughts there, how are you approaching that? And then yeah, I mean, does it have any impact in, um, helpful impact as far as transferring money, right? If you're using something like Bitcoin.
yeah. I think Bitcoin is still, or I would say, I think crypto is still fairly in the nascent stages. I don't know of anybody who like there are either fanatical early adopters who approach me and they're like, I want to do Bitcoin derivative trading. Like, is that something you offer? Or there are people who are like, I don't care about cryptocurrency, right? So there isn't a middle ground that has been bridged, and we have. I mean, I would take the recent example of like the Ukraine Russia Ukraine war, where like things they had completely, the US had sanctioned everybody, and like cryptocurrency became the main way to like be able to like transfer funds in and out of Russia. That seems like it would be a good place to. It's a good example to show what cryptocurrency will look like if you're trying to transfer money between countries, but. We have not kind of reached that stage. I don't think a lot of clients like think about the money transfer in that aspect just yet. So
Yeah.
one thing is just to like keep the footprint as small as possible, where you're like either investing just in this country if you're here, or like going back and investing in that country. But like trying not to transfer money between places. So long, short answer, not much interest in crypto.
That's totally fair. Yeah, I'm always interested to hear what people are seeing actually out in the real world versus like what I see in Twitter, right? Where we might see more, influence or excitement
That
in that space.
That being said, I mean, I know somebody who actually runs like a Bitcoin trading thing in India, and like he seems to be getting a lot of interest from high net worth individuals who see it as like a hedge to the currency, and instead
Hmm.
of like investing in equity markets or private investments and things like that, is just something that you can like an alternative investment almost, right? So I
Yeah.
know there is
Do
a
you
lot
think
of
it's a viable asset class?
So when I think about assets, Bitcoin is not kind of tied to anything, right? Like the idea is that Bitcoin is valued at a certain value because we have been told that uh, it is supposed to have that value, and then like obviously the economics of like limited number of tokens and things like that over a period of time will obviously drive that price up. But I do not consider it a viable asset class yet.
Okay. Yeah, no, it's interesting because again, I like asking people this question. I had a podcast guest a couple episodes ago, and we talked about in depth, and they're very much an advocate for Bitcoin. They work in the space. They were an advisor formerly, and he was pushing back on me for I do believe it's a long term viable asset, but I'm also not like advocating that somebody has to have a percentage of their portfolio in it. And so I just like to hear from other advisors, like as far as what they're experiencing with clients, and then also do they believe in it as a viable asset? And that's totally fine. I know, I don't. It's a very speculative asset, even if it is a viable asset. So
Yeah, I mean that being
awesome.
said, I do have money in in cryptocurrency, but I got in 2018 when like this was before it became mainstream, if you will, because I was just trying to understand the impacts of. It was kind of forced me to like learn about
Yeah,
cryptocurrency quickly, right? So what I did, the way I did it was like I put money in, and then once it went up, I just took out the initial investment that I had made. So like now everything is gravy,
gotcha.
goes to whether it goes to the moon or whether it craters. Like I've made my money back, if you will. So that's how I kind of de-risk that process.
Gotcha. So you want basically for education purposes, you wanted to have some skin in the game, and the same here. That's how I did it too, as well, is because I had some clients with holdings, and anytime a client is holding something, I want to make sure I'm in tune with what is happening in that market, because you want tax loss harvesting opportunities, whatever. Um, so awesome. So talk to me a little bit, I guess. So what are some of the pain points that brings somebody in working with you?
Uh, I tend to work with like younger folks, accumulators typically. One of the big hurdles has like if I look at it from like a timeline standpoint, it's basically people that have graduated, got a job, were waiting for 2 or 3 years to see if they would get picked in the H-1B lottery to like get sponsored. And then have got that, and then now they're somewhere in they're having conversations with their employer about filing for uh, permanent residency, right? So it's at that point where you kind of have a crystallization that there is a chance that you might stay in the country, and now you're like, okay, well, I have to kind of plan. Um, I have to plan all my finances because my biggest pain point, which is immigration, has been taken care of. So you come, I mean, they come with the standard questions of like, can we buy a house? Like, should we set up kids' education? Am I doing this correct? Because like they have not been like a lot of people that I speak to have never not been doing the 401ks, IRAs, mega backdoor Roths offered by their
Yeah.
company, right? Somebody else is like, okay, if we're trying to move back to India in 2 years, like what is the game plan? Which looks very different from clients that are trying to stay here and are trying to do all
Mm.
those, like make all the right money moves. So in broad buckets, I would say people that are trying to get their financial life set up in the US from scratch, and then people that are trying to create an exit strategy to like leave the country and make sure that all their liabilities are met, whether that's as being able to fund the kids' college or like being having enough money to like go be able to do whatever the hell they want, things like that.
No, that makes a ton of sense. And it's a lot of great planning opportunities, and it seems like you've really carved out a great space for yourself. So yeah, I'm proud of you, man. You've done a
Thank
great
you,
job.
TJ. Would
So
not be able to do it without you and other planners who have kind of forged the path 5 years, 3 years, 5 years ahead of us. So,
yeah, well, we got it's good that being younger in the space, right? It's great because we can adapt quicker and we can use all the new technology and
yeah.
we can grow with our clients, right? And be that long term partner. And so obviously, I'm an advocate of people starting earlier, right? Most people associate a financial advisor relationship with like, oh, you're about to retire, right? So
Yeah.
decumulation,
Yeah.
right? But like you said, and then even for the situations you're talking about, it's a whole nother set of problems. But just what are the actual points to make the accumulation process more efficient, right? So that you can get and
Hmm.
enjoy life quicker,
Hmm.
because that's ultimately the goal, right? Money is a tool, and that's the whole point of these discussions. And so, basically to kind of end it off, I always like to ask every guest just one way that people can do more with their money, right? It can be a strategy, a technical strategy. It can be a non, qualitative, quantitative kind of thing, like anything. Do more with your money.
Yeah. I say this keeping my audience in mind, but um, defining enough. I think that is something that's grossly overlooked, regardless of where you're from, but especially in like coming from the Indian subcontinent, you're told work hard and like you'll be successful. But like, what does success look like? A lot of people don't spend time thinking about that. And then you find yourself 10, 20 years into this thing where like your visa is not like you've started a family, you've bought a house, but like you don't know how long you will be in the country, you don't know what else is like going to give you happiness, and so you just end up kind of traveling, buying the Tesla, doing things because like you think that it's going to bring you satisfaction. Whereas,
Mm.
if you knew exactly the direction that you wanted to head in, or if you knew the broad direction you wanted to head in, you would know kind of how much money you need, and then that kind of changes the game a lot, I feel like.
100%. I love that so much because it's so easy, and especially right with people you're working with who are such high achievers and are working so hard and have all of these influences from family and whatnot and pressure. You still want to figure out, what is enough for you so that you can enjoy all of your hard work, right? Because that it's not, again, it's not just about accumulating more.
Mhm.
Like that's a tool to then help us, right? So
Mhm.
I love that. Amazing. And so, last thing is, where can people connect with you? Where do you connect with people the most? What would you like to plug for your socials?
Yeah, I try to write on LinkedIn every day, so you can find me there. Otherwise, we can link my website in the show notes, and I'll provide my email
Yep.
as well. So yeah, and anybody who is an Indian immigrant who wants to talk, I'm happy to like chat with them.
Awesome. Yeah, I'll definitely make sure to put that in the show notes. Thank you so much for coming on and sharing your expertise. I really appreciate it. It's great to catch up. And
Likewise,
yeah, thank you.
thank you for having me, PJ.